Japan just went nuclear on the entire global financial system. And you're sitting on a 30-day countdown. So buckle up. What's coming next is going to be intense. Could we be staring at the carry trade absolutely imploding in real time? And here's where it gets juicy. Might XRP actually be a major player in this chaos? Listen, I'm cutting straight to the chase here. We're unpacking everything that's happening, laying out every single piece of news and hard evidence. Plus, you already know we're diving deep into the what-if scenarios and where this madness could take us. Breaking. Japan literally just murdered a worldwide money printing machine and the whole world's asleep at the wheel right now. There's one number keeping finance nerds up at night, and that number is 1.71. That's Japan's 10-year bond yield, highest since 2008. Here's why your retirement just got obliterated. For 30 years, Japan printed infinitely money at 0% rates and exported it worldwide. 3.4 trillion flowed into US treasuries, European debt, emerging markets. This invisible bid kept your mortgage cheap, your stocks inflated, your government solvent. November 10th, 2025. The bid disappeared. Japan's yield hit 1.71%. They're pumping $110 billion stimulus into their economy, while the debt sits at 263% of GDP. The math just became impossible. At 1.7% rates, Japan pays $27 billion more in interest every single year. Here's the extinction event nobody sees coming. Japanese pension funds are pulling 1.1 trillion out of US treasuries right now, because keeping money in America loses them after the hedging cost. The largest foreign buyer of American debt is about to become the seller. When Japan stops buying, interest rates don't stay flat, they explode. US 10-year yield will jump 40 basis points minimum from flow dynamics alone. Your 7% mortgage becomes 8. Corporate debt refinancing costs spike 60%. Zombie companies holding 3 trillion in junk bonds start defaulting in waves. The yen carry trade just reversed. 1.2 trillion in borrowed yen funding. Crypto stocks and emerging markets must unwind. Every hedge fund, every momentum trade, every leverage bet built on free Japanese money is getting margin called simultaneously. This breaks in 3 places. Stock valuations were built for 2% bond yields forever. At 3.5% yields, the S&P fair value drops 35%. Emerging market currencies collapse without Japanese capital inflows. Europe's debt crisis returns because Italy and Spain lose their silent buyer. December 18th, the Bank of Japan meets 50% chance. They hike rates again. If they do, sell everything, not nail down. Your 401k doesn't price this in yet. The Fed can't stop this. No central bank can. The world's biggest piggy bank just cracked open, and the money is flowing backwards. Position yourself accordingly. Alright, so picture this. XRP potentially stepping up as the hero in this entire mess. Sounds crazy? Maybe. Let's explore it. Now, Jake Claver's been absolutely obsessed with unpacking this whole thing, and his take is honestly mind-blowing. So what I'm about to do is lay out the core foundation of what Jake's been piecing together, show you exactly how this scenario could unfold in real time. And then once you've seen this clip, I'm going to flood you with so much additional background info that everything's going to click into place. Take a listen. There's a $10 trillion ticking time bomb sitting inside the financial system, and almost nobody is talking about it. Unless you've been here on this channel, we've covered it lots of times. It's reversed. Carry trade. And when it blows up, we're going to need something that doesn't exist in the current banking system. And that's where I think XRP might step in. This is about financial infrastructure, systemic risk, and why Japan, XRP, and the digital yen might be the only thing standing between global liquidity and a global crisis. Okay, so if you haven't been here before, we're going to go ahead and go over what the reverse carry trade is. For decades, global institutions have been borrowing cheap yen at close to zero interest rates to buy higher yielding assets in dollars, euros, and other emerging markets. So they would borrow that yen from the Bank of Japan, swap it through FX to whatever currency they wanted, and then go put that to work, earning much higher returns. And then they owe 0% to the Bank of Japan's free money. And that is what the reverse carry trade is. It's close to $10 trillion in exposure. When rates shift or FX volatility spikes, these positions are going to unwind fast. Investors will have to sell off their foreign assets and rush to buy back the yen. So they'll have to sell in the stock market, or gold, or wherever else they're positioned, swap back to whatever the currency was, whatever jurisdiction they purchased it, and then go back through FX to yen before they can repay those notes. So this slams the FX market, the bond market, and credit globally, all at once. So what's going to happen? It's not good, right? It's a tidal wave of capital surging back to Japan. Dollars, euros, and all of the other currencies that people are selling off to swap for the yen crash. And the yen will explode higher, demand for the yen will be excessive. So US treasuries, they're going to be dumped, yields are going to spike, and bond markets will break. Global liquidity will evaporate, just like in March of 2020, but much, much worse. The Bank of Japan will have two options. They can either let the yen appreciate and kill their exports, or they can defend the bond market and risk hyperinflation, because they're going to have to print a bunch of yen in order to buy those bonds. It's a lose-lose situation, unless they have a third option sitting in the background. So this is where think XRP might be the missing piece. So instead of dumping foreign assets directly into the yen, flows could be routed from, let's say, US dollars through XRP, and then into the Japanese yen. XRP would serve as a liquidity buffer. Routing flows around the FX bottleneck settles in 3 seconds, doesn't require either correspondent banking, and it could scale globally if price and infrastructure allow it. So let's get into what would actually need to take place for this to happen. Gold, SBI, and the Bank of Japan. They would have to have strategic alignment, and we know SBI is Japan's largest and most aggressive fintech institution, and they own part of Ripple. So they operate SBI VC trading, and they also use XRP for live FX for mittens. The Bank of Japan is developing a CBDC, which has been in pilot since late 2023, maybe 24, and this would allow them to program the stability of the bond market. But they would definitely need a playbook for this. You'd have to route FX through XRP. You'd have to be able to issue or go live with that digital yen. You'd have to offer yield of rewards for people holding the bonds, and then absorb capital inflows without destabilizing the yen or bonds. Okay, so this is a tricky dance. It's not like it's an easy thing to do, but if you had a liquidity buffer like XRP that could expand and contract to be able to mitigate this risk and volatility, it's going to be much easier to handle this situation when it happens. So how could this work? Like XRP needs to have a couple things happen for $5 to $10 trillion to be repatriated into the yen. You couldn't use traditional FX markets, they would break. You need XRP liquidity pools large enough to absorb and route those flows. So let's do some math. To absorb $10 trillion in 30 days, with about 5.5 billion XRP, and if that was turned over 10 times daily, XRP would need to be around $180 per token. This is a mathematical inevitability if it's going to serve in this purpose. The world doesn't need XRP height. It needs XRP liquidity for when this is going to happen. So let's break it down. What are all the things that actually have to happen for SBI, the Bank of Japan, and the rest of the world for this to take place? The Bank of Japan would have to authorize XRP in FX settlement systems. Okay, and we know that they've been building that in the background with Ripple for a long time, so probably in place. SBI needs to build deep liquidity pools between the yen and XRP and USD XRP corridors using RippleNet, or the AMNs on the XRPL, which were put out a while back with XLS30. So it's possible. You would also need regulatory clarity in Japan for XRP. It would need to be approved as a settlement asset and also not have capital gains if it's being used in that capacity. You would need CBDC rails to go live with programmable yield to absorb the bond flows. And again, we know that that's been in pilot for a long time, so likely they probably have that in place. You also need global partners to mirror those corridors for all of the currencies that we're to be swapping back to the yen. So that's the US, its euros, and any other jurisdiction where people have borrowed yen to be able to put it into financial markets. And then last, XRP liquidity would need to be locked, incentivized, and scalable. So we need a significantly higher price for XRP for it to be able to facilitate this. And again, you know there's a lot of ways that could happen, but you need a supply shock on the asset. If we don't have something like